This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe, and what I'm going to talk about today is something right out of my course, what I refer to as a special pattern. I've got a couple of these. I do want to talk about one I refer to as the undercut and rally. I'll basically go through kind of the key things that I see in relation to this and maybe give a few extra details that I haven't talked about in the past. Let's go ahead and get into this. Now, if you do want to get started with this, I don't actually have the undercut and rally pattern in this book, but it goes through a significant amount of detail about you trading in multiple time frames and the MACD and the ADX. So if you want to get started, this is a good place to go. Also, if you like this content, please hit the like button and also subscribe. All right, so I've got two time frames side by side. This is a great way to start your understanding of trading in multiple time frames. I think is learning two time frames back to, side by side like this, and just recognize what we're trying to identify, because it's really a confluence of events. Not necessarily we're not necessarily looking for the exact same thing on two time frames. Sometimes that's the case, but a lot of times it is what I would refer to as complementary patterns. All right, now when it comes to this undercut and rally pattern, I'm going to use deer on the monthly, weekly, and then I've got a different example for a weekly, daily. I want to make sure you get that the power behind this setup is that there are times where we might see some overrun in MACD, which I talk about, or maybe a little bit too much strength in the selling with respect to negative DI. These are things with respect to MACD and ADX. But if we get the undercut and rally pattern, it can somewhat override those indicators in certain instances, because what we're trying to identify is when there was too much selling taking place, people got kind of caught with their pants down, sold out of something, and then it quickly reversed. And that ends up creating new demand that can come a lot quicker than you might think. So the negative in the MACD and the ADX is actually a positive if it reverses very quickly. All right, so that's the concept behind this signal. Now, what I want to explain, I'm going to start out on the weekly chart, and I'm going to show you what I'm referring to when I say undercut and rally. So if you notice, we had these lows here at the end of 23 and early 24, pretty solid support area. And then even prior to that, we had another low that was a little bit lower in early part of the second quarter of 2023. And so, you're kind of looking at this area here and saying, if we undercut this and break it, it should be very important, because we've been working sideways for a while. If we break it, we should see follow through to the downside. All right. Now, if you notice the way it played out, it did take out these two lows, but not only did it do that, all right, it took out this bottom as well. From May of 23. But look at how it finished the week. We finished with a doji bar, an indecisive bar. Now, you had a pretty big red bar to the downside, but then very little follow through in terms of its decisiveness. All right. And so if you're on the lookout for this pattern, you want to see if we get some kind of a sign of either an exhaustion sign bar that has no follow through, or a reversal bar like this. This doji bar definitely suggests that we need to be on the lookout for, is this a pause in the downtrend, or are we going to see a reversal? All right, now, if you notice the way it followed, obviously we opened up right where it closed the prior week, kind of fiddled around, and then straight green the rest of the week. All right, now, I want to go through a few things about this. Now, what I talk about in the course is, we want the higher time frame to still be in an uptrend. Okay, now, when I look at this and I see what's taken place, we had a really big move. Obviously, we're in an uptrend at this point, right? And then we get a move to the upside, and we get kind of a little bear alert, but then it immediately reverses and then comes all the way back up to the high, right? And then comes back up and tests the high again. Now, this moving average isn't really acting as support here. And in fact, where the undercut takes place is down here, below both moving averages, all right? So if you go by the letter of the law, and I say, because I give the examples of ones that are pulling back to a rising 18-month, okay? Well, if you go by the letter of the law, then you would say that's really not an undercut and rally pattern. However, it meets all the other criteria, and I would still consider this to be in an uptrend. You're in an up, so here's the one thing, the way I would look at it is, if I'm like this and I do that, I'm still in a downtrend, but I'm in transition. All right, this is a transitional phase. It hasn't reversed to positive unless it does that. All right, but as long as we haven't done this last component, I would still consider it a part of a downtrend. It could be a correction in a downtrend, or it could be a part of a reversal. We don't know yet, but you haven't convincingly reversed the trend. So if we look at it in those terms, we haven't reversed the trend to bearish. So we're still qualifying as being in an uptrend. Now, there's another way that you can, I think what I like to look for, and I think can make it a lot easier to determine, is what's going on with the MACD. Because if MACD, and let's just go back and look at this, you see where this turned up and broke out at 100 back in 2016. And from that point on the monthly chart, the MACD line has been above the signal, above the zero line. All right. So you could almost look at that as saying that's an uptrend. I mean, as long as this stays above, we're still in an uptrend. Yeah, this is a correction, a long one, based on the MACD, but we're working our way back down to the zero line, and we're not breaking that, similar to what happened here. So I can use that as sort of a complementary. I prefer to use the price action along with the moving averages, but the MACD can act as a trend indicator as well as a momentum indicator. And so if the MACD line stays above the zero line, then we can consider that confirmation that the trend is still to the upside. All right, that's why I love the pattern where we come down and do that little flyby and we turn right around right near it, similar to what happened here. And so we want to be on the lookout for that. All right, now a couple other things that I would suggest. When you have this kind of an undercut that does this and then has the doji bar and then immediately shows the strength to the upside, I mean, in the rules, I basically say I'm looking for this pullback here. All right, I want a little bit of confirmation. I'd like to see the higher low come back and test. And a lot of times what will happen is it'll come back and test where it broke down from. It'll come back and test here. I'll give you an example of that in a second. But in this case, because it undercut such a key level and then got the big green bar going, I don't know that you have to wait for that higher low. I mean, we're looking for some confirmation, but a big green bar after breaking all of this support, I think is a pretty good sign. Now, if you're looking for a setup after that, obviously this pullback here to the moving averages was really nice with the pinch play and green DI taking over again. So that's the highest probability setup here. But if you're looking at this for other reasons, let's say you like the company or you're very interested in getting in, this might not be a great example of something like Deere, but a lot of people say, hey, I want to get back into one of these big cap tech stocks like Tesla or something like that. If Tesla had pulled something like this, then this would be a great way to be more aggressive in your entry in a stock like that. All right, let me give you a different example. This is CYBR. Now, the weekly is on the right and the daily is on the left. All right, now if we look at this, this is where right here is right here. Okay, so we're undercutting this kind of key support in a violent manner. All right, and then we get a really strong reversal right off of that. Okay, so look at the way, red DI popped, but it happened so fast it really couldn't get ADX going. But look at the way this overran, and it looks kind of violent in the way it trades, but then it gets a massive reversal. And when that's happening, these are just not going to be able to catch up that quick. It just takes too long for these indicators to reverse. So when we see that, we need to be ready, and you can be on the lookout for this test of this area. This is classic. Right, this is pretty much right out of the rules. All right, this has undercut, only happens really happens for a few days. Strong reversal, comes back and tests the area of the breakdown and then makes the higher low. Right at a rising 18 week, which is above a rising 40 week. All right, we even had a pinch play develop, and look at how green DI had, or ADX was positive at this point. So when we have all that, right, we have a lot of confidence that we could play this. Now, even that one took a little while to get going, but we're talking about getting a really high quality entry where you can get in and using your average true range type of stop approach, you can be in, and yeah, it might take a little while to actually kick into gear, but your entry is outstanding. So those are kind of the two different ways that I think this can be used, right? So understand the difference between, breaking support but not really turning the trend to the downside, okay, versus having a pullback right into trend support, all right? So this is actually a pullback into price support, and this is a pullback into trend support. All right. So hopefully this makes sense. Let me know if you have any questions. Thanks.